Hello, and welcome to myfinanceteacher.org. In this video, I want to have a look at Alexco Resources. AXU is the ticker. And this company was actually suggested by one of the viewers on YouTube, so thank you. I'm always welcome for suggestions. So in trying to give a valuation to this company, I'm going to look at a number of factors listed here. First of all, of course, it's the silver and gold price, where silver is the main factor here. It's mostly a silver company. Of course, we're going to look at the amount of reserves and resources the company has in the ground. We'll try to think of the production costs, although the data is not available in this particular case. But in general, for my valuations, of course, I do include production costs in the valuation as well. Out of the value of the reserves in the ground, I subtract the long-term debts that the companies would have and have a look at the value per share for the companies based on the number of shares outstanding. And of course, we do take into account time value of money by discounting the value based on how long it would take for the company to extract these reserves out of the ground. So next, let's go through all of these one by one and see what's our valuation for Alexco Resources compared to its market price. Starting with the prices, we're going to have a look at the prices on the 30th of October today. This analysis of Alexco will be first published for members at myfinanceteacher.org, and maybe a couple of weeks later, possibly when the share price of the company is already higher, I might actually consider making this video public on YouTube as well. So if you want to have access to timely, more frequent and more detailed updates on a range of assets, come join us at myfinanceteacher.org. You can join us by clicking this register button. The first month is only $5 with $10 per month after that. So coming back to our silver and gold prices, as usual, we're going to have a look at three scenarios: balanced, conservative and optimistic. In the balanced scenario, we're going to plug gold and silver prices that are 2% below the ongoing spot price. That's already our first step towards being more conservative with our investments, even though it is a balanced scenario for the valuation. In the conservative scenario, we're going to reduce these balanced prices by 10% in case of gold and by only 5% in case of silver. The difference is because I still think compared to gold, silver is a little bit undervalued. And in the optimistic scenario, we are not really extremely optimistic. Again, you see that even in our optimistic scenario, we lean heavily on the conservative side. So in this scenario, we're going to plug a gold price of only $2,016. That's only 10% above the balanced scenario. It's only 8% above the ongoing spot price. And in case of silver, we're going to plug a price of $27.3. That's 20% above the balanced price, or only about 18% above the ongoing spot price. Is this too optimistic over the next couple of years? Well, maybe it's for you to decide, but in my opinion, even our optimistic scenario for the prices of precious metals is kind of modest in my opinion. Share your opinion in the comments. I would like to know what you think. Next, let's have a look at the reserves that the company has. Looking at the corporate presentation from October this year, we see that the company doesn't have any proven reserves. Instead, they do have only probable reserves of only 13,000 ounces of gold. But for silver, I'm going to use 27.4 million ounces of probable reserves. Actually, the presentation shows a larger number for the company's reserves. This number that I'm going to use here is only 90% of the actual reserves that the company has. The reason I reduce the amount of silver reserves I plug into the calculation is because Alexco Resources has an agreement with Wheaton Precious Metals, where Wheaton is going to buy a quarter of the production at some sort of a discount. And that kind of limits the upside potential possibly for Alexco Resources. Looking at measured and indicated resources, Alexco has 60,000 ounces of gold, and the company has 83.6 million ounces of silver in measured and indicated resources. Actually, in our conservative and balanced valuation, we don't include these numbers at all. So even in our balanced valuation, we are pretty conservative. We assume the company doesn't have any of these resources. And only in our optimistic valuation, we include only half of these resources. So again, even with our optimistic valuation, we are pretty modest over here. That's all in an attempt not to buy any of the overvalued companies. Next, all-in sustaining costs is what we usually look at, but unfortunately the company doesn't have any production and they don't report any costs of extracting the precious metals from the ground. So let's just throw in some numbers. Let's say the company will have something like $1,200 in all-in sustaining costs for gold. And for silver, let's say that cost is going to be around $11 per ounce. I think it's comparable to many other silver and gold mining companies. If you disagree with this, let me know in the comments and maybe we can quickly plug in some alternative numbers. Next, for long-term debt, the company has 820,000 Canadian dollars in debts. That's about 630,000 in US dollars. And this data is from the balance sheet in the Q2 report of the company. Yahoo Finance shows that the company has 136.81 million shares outstanding, and of those, insider shares make up 3.93%. We look at insider shares as insiders might actually be strong hands, possibly supporting the share price a little bit. In terms of taking the time value of money, I'm going to apply the discount rate of 5% to the reserve life of around 7 years. So, with all of the above in mind, our conservative valuation, which includes a gold price of only $16.49, silver price of only $21.6, and only the proven and probable reserves. All of that gives us a conservative valuation of only $1.83, which is quite low compared to the ongoing market price of $2.43 as of market close yesterday. So this shows you that if precious metals don't shoot up, as I kind of expect them to over the next couple of years, that would be possibly an indication of your downside risk on Alexco Resources. Next, looking at balanced valuation, where the gold price we plug in is 1833, silver price is 22.8, and we still only look at P&P reserves. That gives us a balanced valuation of $2.03, which is still quite far below the ongoing market price of $2.43. So unless you disagree with, let's say, assumptions on the all-in sustaining costs above, Alexco doesn't seem to be hugely undervalued at the moment. And for our optimistic valuation, where we plug in the gold price of 2016, silver price of 27.3, and where we include both P&P reserves and half of measured and indicated resources, all of that gives us an optimistic valuation of $5.07. Now that is much better, and it looks good compared to the market price of $2.43. So generally, what this could tell you is if precious metals continue to do well as they have generally done this year so far, if they continue to do well over the next couple of years, there is a nice potential for possibly doubling your money with Alexco Resources. And although nobody knows the future, of course, a lot of money has been printed this year by many governments, and many assets related to precious metals are likely to do well. Remember one thing though, this is a long-term valuation. Whatever the numbers show here, from day to day the share price can actually change in whichever direction. Next, let's have a look at some highlights for Alexco Resources. The first thing to reiterate is that we don't have numbers for all-in sustaining costs. The numbers here are just assumed. Next, a very interesting highlight. The company is expecting silver production to start in fourth quarter of this year. And given that today is the 30th of October, maybe some good news might be announced by the company possibly over the next several weeks. That could be really positive for share price, whatever is the longer term valuation. And the company expects that the start of this production will ramp up to full production levels sometime by the middle of next year. And another highlight to mention is that actually, besides precious metals, the company also has reserves of lead and zinc. which might actually limit the downside risk with this company to some extent. Next, let's have a look at the chart. The bar chart here is the XAU, and the blue line is the price of silver. As you see, generally, XAU has a little bit of a leverage compared to the silver price. XAU volatility is a little bit higher than the volatility of silver price. And as precious metals are coming down over the last several weeks, we see XLU dropped from all the way up at $3.50 down to under $2.50 at the moment. But as you know, I think the intermediate cycle in precious metals is nearly over, and possibly there would be an interesting buying opportunity on XAU if over the next several days the share price comes closer to that, say, round number of $2, and if the share price comes down to that support zone based on the March and April high as well as the May low, that would be somewhere around $1.8. In that case, that would really be quite attractive, as in that case, the market price would be coming close to the actual conservative valuation. That is all on XAU. For more frequent updates on a range of assets, join us at myfinancesteacher.org. For now, I wish you a very pleasant day and good luck in your trades.